What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. It's a second video for today. We're taking a peek over here at the Bitcoin price chart. Gave the price charts kind of all day to play out, and in the macro world with the United States stock market, bond yields, Bitcoin, crypto, to see how things would unfold throughout the day and see if we would find any type of supports or any type of breakouts that would happen. And we did have a lot of concerning things happen over there in the stock market, so we'll talk about those. But peeking over here at Bitcoin, you can see so far it's been holding that 200-week moving average. Is that temporary? I can't speculate on it at this point because there's so many macro things that are pretty scary that are happening out there in the big landscape of it all. I would say the biggest thing out there is the stock market, is that we are now setting another low. So it's just rolling. There are no Elliott wave counts in here that I can do. This looks like a potential crashing market here in the stock market. In addition to that, the DXY has set a new high. In addition, the US government bond, the Treasury bond yield today, the 10-year, set a new high compared to 2018. And we have not seen something like that happen in here. If you go back through the history of time just to see how this thing is really always downtrending, right? You can see how it's always downtrending, and then boom, we have broken out in here. So what is going on with US government bond 10-year Treasury yields, including that? Look over on the right side of the screen. Lots of green ones in here, right? When I released the videos over the weekend, we showed that the 2-year had broken out and extended itself, right? Go back through history in here to see how often something like that happens. You don't get that. Look at the 5-year, right? So there's a lot of concern out there. And if you don't follow Sven Henrich over on Twitter at Northman Trader, one of my favorite follows here on Twitter at Northman Trader, saying if yields keep flying like this, the recession starts on Wednesday, in which he wrote up on it saying the 10-year yield now exceeds the levels of 2018 that markets couldn't handle, then forcing the Fed to flip-flop on rate hikes and quantitative tightening, cutting rates 3 times in 2019. Now, these 2018 levels are being exceeded with over $8 trillion in additional debt added in less than 4 years. These levels and trajectory are not sustainable without a major recession ensuing. And as we saw in 2018, retail sales collapsed following this market tightening and associated market drop. By insisting the economy is strong, the Fed is again misrepresenting the true state of things. So Powell needs to figure out a way to drop that 10-year or he can kiss his soft landing goodbye. And the 10-year yield is the one that most people pay attention to. You've got the 2, the 5, you have others. You have 10, 20, and 30, but the 10 is the one that people pay most attention to. And over here on Investopedia, why the 10-year U.S. Treasury yield matters, these rates indicate the confidence of investors in the economy. Treasury bond yields or rates are tracked by investors for many reasons. The yields are paid by the U.S. government as interest for borrowing money via selling the bond. The 10-year Treasury yield is closely watched as an indicator of broader investor confidence. Because Treasury bills, notes, and bonds carry the full backing of the U.S. government, they are viewed as one of the safest investments. The 10-year yield is used as a proxy for mortgage rates. It's also seen as a sign of investor sentiment about the economy. Over here on Rocket Mortgage, how do mortgage rates and Treasury yields work? U.S. Treasury notes, bonds, and bills can all have an impact on fixed-rate mortgages. For example, Treasury yields impact conventional fixed-rate 15- and 30-year loans, and the higher the 10-year Treasury goes, the higher the home mortgage rates will climb. Conversely, lower yields on 10-year Treasury notes translate into lower mortgage interest rates for home buyers as well. Hence, why we've seen the lowest mortgage rates in history as the 10-year has been so low. And now, as it's breaking out, we're seeing higher mortgage rates. So right now, today, a mortgage is about 6%. Mind you, about a year ago, it was 3%. And really, just 4 or 5 months ago, it's like 3.5%, 4%. So it's happening really fast. And now we suddenly have a breakout in the 10-year yield and a breakout in the DXY, or US dollar currency index. The euro is still holding its lows that it placed back there in mid-May. However, Treasury yields are breaking out and the DXY is breaking out. Not good signs, especially not with the stock market that continues to set new lower lows and lower highs. I've done a lot of work putting together charts showing how crypto has behaved in relation to the stock market. And every time that the Dow went into major pausing periods, that was also time periods where crypto went into pausing periods or bear markets. And the question has always been, where is that top going to come in for the stock market? And at this point, it's getting pretty nerve-wracking that we may have already put in the top in the stock market. And I'd say by the day, it's looking more and more likely that it has, considering it just cannot seem to find any type of support. And now that we're seeing Treasury yields break out, and like I've said, in every bubble I've ever seen printed, you don't see that level get taken out without the pop having already occurred. Of course, in several equities, it appears we have already seen the pops come out of them, such as ARK, such as Netflix, several other big tech names. But the question has been, has the entire economy, has the entire stock market actually ended up popping? And it's stacking up more and more things in favor of that it has already topped. So then comes Bitcoin, right? Historical moment for Bitcoin throughout all of Bitcoin's history in here, seeing that today is the day we're back there. We're back at the 200-week moving average. We know that in 2014, that was a historical support. And in 2018, the famous support that happened in there. Interesting enough, very similar behavior getting back to that 200-week moving average. You could see it had a capitulation event, then finally went on for one more dip to get it. We had the big Terra Luna USD. Now we've come down in here. However, we saw some other things breaking in the market. And we know that with Terra and with Luna and UST, the after effects took a few days before things really started playing out. And that late last night, Celsius network paused all withdrawals, swaps, and transfers between accounts. So this is one of the major DeFis in the cryptocurrency market. And ever since this tweet that they have here, they have not posted anything. And the question remains on whether or not there's going to be fallout from that, and if there's going to be any fallout from what's happening over here with Tether USDT. So we saw lines start to get crossed throughout the weekend. We saw it pick up speed today. There's no evidence in the stock market of that a bottom was found. There's no evidence of high buy volume coming in here with some type of reversal coming in here at this point. We can look at it on the 2 hour over here on Coinbase. We can look at it on the 1 hour. We can look at it on the 8 hour or the 4 hour. No huge buy volume showing up here for Bitcoin. So no evidence of that being the support as of yet. And the bigger question comes of if we're seeing a collapsing stock market at this point with what's happening over there with Treasury yields. And like I've been showing with these fibs, with how high the stock market has gone at this point, I think a lot of people talk about recession coming out there. With how high this thing is, I mean, if we're in a start of a crash, this is not recessionary stuff. You know, I'm not the type of person to go out and spread a bunch of fear. But the reality is it's been setting lower lows and lower highs, and it's not showing any type of support. And we're seeing the dollar breaking upward, and we're seeing Treasury yields getting bid up. But today was a monumental day. This area was the breaking point for where the Fed had to pivot and had to reverse because the markets were falling apart back in 2018, consumer sentiment and consumer spending. We have now just exceeded that. This is where the Fed pivoted and changed and said, no more quantitative tightening, and then started cutting rates. On Wednesday, they're going to come out and announce, are they going to continue hiking? This was where they folded and stopped hiking. Will they keep going here? The market believes that they will keep going, which creates a higher demand for dollars. It's an unprecedented time. So these are the challenges that we're facing right now in the cryptocurrency market. Looking at the RSI over here on Bitcoin, we can see how oversold we are on Bitcoin. You can look here on the weekly time frame to see how oversold it is. We are almost as oversold as we were back in 2015. We are more oversold than we were back in December of 2018. So when it bottomed back in here, this was the RSI level. We are currently more oversold on Bitcoin and the crypto market than we were at the bottom of the bear market in 2018. Flipping us over here to Coinbase as well. If we want to use the Coinbase data, we could see we're more oversold on the weekly time frame for Bitcoin than we were in 2018. So relative strength wise, it matches up. Time perspective, it matches up. We've shown this over here that these things from a time perspective have elapsed enough time for a capitulation to have already occurred in the cryptocurrency market. The thing that just has me very uneasy out there in the market right now is that the US dollar currency index poking up higher, along with those Treasury yields poking up higher. That's something we haven't seen before. Along with the US stock market rolling over, just having lower lows and lower highs, and mix in the fact that we just keep having things break in this market. We had Luna and Terra and UST. We now have Celsius, and we have unusual behavior happening over here on USDT or Tether not being pegged back to $1. And whether or not there's a risk in there, I don't know how to interpret it. The whole Luna, the whole UST thing scared the daylights out of me. Like I said, I've never owned either one of those, but the fact that it even happened in this market scared the daylights out of me. The fact that we have Celsius now announcing this within the last 24 hours, the fact that after spending over 30 days kind of grinding its way back up for USDT, but still pointing to it saying, why hasn't it repegged yet? Boom, there it goes again. Definitely an uncertain time out here in the cryptocurrency market and the stock market. So a historic day for Bitcoin heading back to the 200-week moving average today. It's a milestone moment. We've seen this happen before. I remember living through that moment right back there and back in 2018. I remember that being the bottom. You can even see there's a little wick that's right there beneath it. I remember that wick even when that was happening, when it was poking below, but then eventually closed itself above. And I remember how scary all of that was right in there. And here we are at that moment once again. That moment was very similar in here with the US 10-year Treasury yield as it was poking above the 2013 high. However, at that point, the Treasury yields had already started to come back down when that capitulation was over. And right now you can see we're still just today. We're just breaking out today. So definitely not confident in the cryptocurrency market right now, given all the things we're seeing happen in the stock market and all those breaks and lines in the sand that got crossed over the last few days. And the post-traumatic stress of what happened with Luna and UST and seeing more things starting to break in this market and what are the consequences of these things when they happen. So not looking good out there, guys. The stock market definitely did not give any signs of optimism today. And then with those breakouts also happening, like we were talking about over the weekend, and then them continuing throughout today, there doesn't seem to be any sign of the world of pain coming to an end anytime soon, and we still don't know what's going to happen with Celsius and if there's other things breaking underneath the hood with USDT. Uncertain time. I'm not feeling confident in it. I do still own all of my cryptocurrencies. Not saying that's the best move. Everybody kind of has to assess what's right for them. But if we're going to see some type of bigger move come out of Bitcoin, history has shown that's probably going to translate into the altcoin market as well. And like I said, I don't have a bottom area for where that could happen at. Bitcoin, holds this 200-week moving average, goes back into a retracement at that point. Woohoo, yay, yippee. But I wanted to show you all those things that happen over there in the Dow Jones Industrial Average, the things that happen over there in the Treasury yields and the DXY. Those are all very concerning, and to each their own on how they want to treat that. But unprecedented time. We've never had this combination of things happen in the cryptocurrency market like this. When you mix in the fact that inflation is at record highs, it's kind of like this. It's always been like this should be the shining moment for crypto, right? And maybe that moment's down the road, but so far with how it's been behaving, and if the stock market keeps going in this trajectory, which it hasn't shown any signs that it's reversing at this point, I have to go into it with the idea that it's probably still a rough ride ahead. So, all right, guys, it's been a doozy, man. I've worked all the way through the weekend, and now 2 videos here on a Monday as we are now in such a pivotal moment and crazy time out here in the markets, and it's rough out there, but otherwise we'll take it tomorrow. But all right, guys, that's going to be it for this one. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.